top 7 things that I learned in my first year of options selling. So, like I said, I have an account, it has like 30,000 in it. I started with 20,000. Number 2, we'll get into position sizing and, what I learned from that. But the first thing I want to talk about is that my strategy totally works for me in terms of analyzing the financials of stocks, or I should say companies. Analyzing the financials, and I use a couple key ratios that I learned in my master's in an accounting class that I took. I have my MBA, and I was so scared to take this accounting class, but really it taught me all of the fundamentals that I use in my strategy, things that I have never heard anybody on YouTube talk about. And so I'm excited to add to the conversation when it comes to option selling, because never heard anybody talk about these things. I mean, I hear people talk about like PE ratio a lot. Like, that's fine, but I really avoid things like hype, because I look at return on equity for 10 years. And that is, I believe, a Warren Buffett-esque rule. It was taught to me in my accounting class. And I really, really like it because it helps me avoid the hype that people talk about. Like, there'll be like, things like, Robinhood, that's a big one that options sellers are big on. People are selling options on Robinhood. Now, I use the app to sell options, but I'm not going to sell options just yet on the Robinhood stock, because the last time I looked at it, I believe the return on equity was just not consistent over the past 10 years. And I like consistency. I'm a little bit more old school. I personally am not really looking for like the next big hit. I don't really like that risk. And some people do. I have a friend that got onto Carvana. They didn't option sell or buy, but they bought some just straight up Carvana stock when it was super low, and then it shot up. Like, I admire that hustle. I admire that game. But personally, if I'm dealing with 100 shares of stock, and like I said, the second thing we'll get into is collateral size. When we're dealing with some of the amounts of cash that I need to throw on the table whenever I'm selling options, I don't want to deal with things that are just like hype. Hype matters, but I don't care about what's trending. I need solid fundamental finances. So that's the first thing. So I'll pop up this cheat sheet that's coming from and a little options course that I'm working on. Making this video first, and I'm putting this video out first because I'm such a perfectionist. I'm a type C on the DISC profile for sure, and I'm overthinking the class too much. I want to get it perfect for people who don't know anything about options to learn. And to be honest, like, it's just really hard to teach it and to understand these concepts. So I'm overthinking it. I'm just ready to start the conversation. So that's why we're here. But this is a little snippet that comes from that class. It's really good because it has the fundamentals that I got from my accounting class. These were like the highlights that our professor wanted us to focus on, and they've really just proven just true for me. I put any stock that I'm thinking about trading options, I put these ratios up to the test, and it really does define what I choose to invest in. So that being said, the second is position size. So before I move on, I do want to say I'm going to have a summary of all 7 of these things in the description. So if you're like me, I love reading ahead and seeing if a video is like worth my time. So go ahead and do that. But the second thing is position size. So to tell you a little bit about my story. So I started learning about what options were in December of 2024. So I was paper trading on the Thinkorswim mobile app for iOS, and I was just like, finding like a couple of random companies, like I believe Southern, it's like an energy company that I think is like either a dividend king or dividend aristocrat, sorry. And I was having, a little bit of fun with that, and then it was time to gamble with the real money. And my options account when I started was $20,000. So I have, my regular retirement accounts. I have a Roth IRA. I have all of that. But then I had, on top of my emergency fund, that's separate. Want to be clear. This is not financial advice, any of this, but I definitely am not like putting my cash, like my emergency fund cash, in my options account. But I had a little bit of extra after all of those things, and $20,000. I was ready to sell my first put. So I used, again, my cheat sheet of financials, and I looked at Google, and I really, really loved Google's financials. I thought they were great. I actually did my accounting project on them in 2023, and again, loved the financials. So I really believed that the price of that stock was going to go up. I was eventually right because, oh my gosh, Google is trading so much higher than it was whenever I first sold my put on them. But what I learned about position size is truly how emotional it is. So I sold a put, let's say it was like 189, strike price was like either that or like 187. And then the price started going down. And this was after earnings. So it was like, 2024 earnings were out in the first quarter of 2025. And they hit their earnings, but the price of the stock was just going down. And this was so confusing to me because I was like, well, why is it going down? And I think it was just because investors sometimes with these, like, I don't know if you call it blue chip, but some of these bigger tech stocks where in 2024 there were just like these massive gains, people can sometimes get so greedy they become fearful within the tech space, because even Nvidia, and I can get to this later, you'll see stocks like this that will hit their earnings and the price will go down. So public perception and hype does matter, but ultimately I would have been okay to stay in that position, but I sold my put and I started freaking out because the price kept going down. And if you don't know, when you sell a put, so let's say my strike price was like 187, so that's $18,700 because it's the price times 100 because it's 100 shares at a time. So that's $18,000 that I was going to have to put on the line and basically buy these shares if the price was still below that 187 at expiration at the end of the week or the end of the next week, whatever it was. And I was freaking out. Like, I was seriously freaking out. I was like, this is not the right place for me to be because this is my entire account. Like, this doesn't fit my risk tolerance. I still want to make sure I have money to play with my options account. I don't want it to just be held up in this one position. Like, this is the wrong size for me. So position size actually absolutely does matter. Now, was I right when it comes to Google being worth more than that? Yes, because now what is Google, like over 300? It's like out of my budget right now in my current position size, which is closer to 30,000 in my options account. But still, I personally am not so in love with Google that I want it to be my entire options account, and that's still the same today. So that's the second thing. The third thing, again, this has to do with my strategy and how obsessed I am with my strategy, how much I love my strategy that I've developed in the last year. And that is my love for a standard Bollinger Band, a Bollinger Band. I actually have a book written by Mr. Bollinger himself, and I didn't realize my lipstick is in the way. But this is a book called Bollinger on Bollinger Bands, and it goes over, it's actually a McGraw-Hill, so it's literally like essentially the textbook on Bollinger Bands. I'm not completely done with it, but what I have learned from it is that a standard Bollinger Band uses a period of 20 days. So it looks at the last 20 days, it takes the average stock price within those 20 days, and then it's going to take your standard deviation. So this is where we get really nerdy, and this is where we get really, really, really fun. Things get really fun because you look at two standard deviations below the mean of a stock and above. So you can look at like one standard deviation above and below, but then those second standard deviations above and below, I mean, I really I really can't tell you guys how excited this makes me. And well, really, I can tell you why. And it's because they help me make money. Okay? So I should have started with how much money I've made trading. I'm up since January 1st of this year, $1,475 overall in my options swing trading account. I'm up $4,955. Okay, but with that being said, I make money on the standard Bollinger Band because when a stock goes at or below that second standard deviation band, that's when I scoop it up. And or I'm selling a put and making premium. I have not even been assigned this year on Nvidia. I've just made like a lot of money. I don't know how much of my $1,400 has been just put premium on Nvidia when it's hitting those second lower standard deviation bands. But Mr. Bollinger really changed my life. And that's why he's sitting here at my desk. The book only got like 3 stars on Goodreads. I don't know why or how. People don't understand, okay? This is life-changing information. And I'm obsessed, and it really works for me. This is not financial advice for anybody, but I will absolutely share what I have learned, and there is just no getting rid of my love for standard Bollinger Bands. What I like to do is I like to look at the price of a stock over the last 3 months, and I'll put on that standard Bollinger Band. Yes, the standard Bollinger Band only uses the last 20 days, but I still like to look at what price has been doing for a stock in the last 3 months, because that gives me an idea of if it's been really bearish, if it's been closer to that lower Bollinger Band, or if it's been really bullish and it's trending towards the top. And I really don't like to trade on either of those scenarios. I really like to look for stocks that are going up and down, because that's as essentially a swing trader. I really love when there's high volatility and I can get in at a low price and very quickly and easily turn that over and sell it at a higher price. So absolutely love Bollinger Bands. Could probably make a whole video, have an entire conversation just on that. Maybe after I finish the book, we could do that. So, was that number 3? Yeah, that was number 3. So, number 4. Robinhood is my favorite trading app, but it has super big drawdowns. And what I mean by drawdowns is that it uses a method called first in, first out for multiple options contracts on the same stock. So again, my account size is pretty limited. You know, I'm trading like between 20 and 30,000, hopefully a little more soon. But that means that, you know, I have limited options that I'm going to be trading on. So it's rare that I'm going to have multiple contracts on the same stock. But it did happen to me last year. I had 2 contracts that were filled for NVDL, which is a leverage play of NVIDIA, meaning that if NVIDIA goes up 1%, NVDL is meant to go up 2% in that same day. There is time decay that happens with that. It doesn't like hold its value exactly forever. And there's videos on that, but from other people. But I got assigned twice. And so just for this example, I'm not going to give you the specific prices, but let's say I got assigned to $40 and then I got assigned to $30. So the price of NVDL kept going down. I sold a put. I got assigned at $40. So then I owned 100 shares of those. So that's $4,000 of that. Then it kept going down. I kept selling puts and haven't had a chance to like sell that $40 at a higher price and make profit because it just kept going down. I was like, okay, I'm going to keep selling puts. So then I got assigned at $30, let's say. And price went down even more. So then it was like $25. Then once it started to climb back up, I was like, okay, great, I'm going to sell calls. So I sell a call at $31 thinking, okay, I'll make like a little bit of profit. Surely Robinhood's going to let me choose to sell the stock that I got at $30 because that would be the only way I can make profit. No. They use first in, first out, meaning that if I would have stayed in that contract and had I not doctored that trade, I would have lost money. They would have sold the $40 shares at $31, and that's a loss of $900. because, the contract is 100 shares. So that was crazy. I had to doctor that trade. I used ChatGPT to help me get me out of that. It was total like nonsense jargon. Had no idea what was going on with rolling a call. Options can be so confusing, so freaking confusing. And even now, like, I've tried to use Fidelity or other apps to understand, like, I'm like, oh, I could totally sell options on here. I'm sure I could after some, education, but just right off the bat, it's a lot harder to understand what's going on. With Robinhood, the options chain is pretty intuitive. If you don't like options chains, there's like a different way that you can view them, which was even more helpful for me in the beginning, but now I use the chain. So, love Robinhood. Also, something really amazing that they just introduced is that cash that's being used as collateral. So, meaning I sold a put, my money is kind of in a waiting period between now and the end of the contract expiration to know, like, oh, is this going to be assigned or not? While it's waiting, it's making the like high yield savings account APR. So whatever that is, it's over 3%. So I'm obsessed with that new feature. That's new. It used to be, oh, if you're using cash as collateral, it's just being held out in space. It's not appreciating any money. But hopefully, you're going to be appreciating money on the put premium that you get. That's usually what happens with me. And I think on the year, my cash is up like 11% or something in my Robinhood account. And compared to the S&P 500, the S&P 500 is down a couple percentage points, I believe, last time I checked. So, I mean, we're beating the high yield savings accounts and we're beating S&P. So, pretty great. So number 5 is that leveraged stocks are great, but usually I would rather trade the actual stocks that they represent. So this is a new thing for me because, I mean, I made all my money last year on leveraged stocks. One of my favorite plays was on SOXL, which in my mind, for some reason, I call it SOQL. So I call it so cool. I've literally used that in conversation with people who trade that like in person and they didn't correct me. So that was lame of me, but it's SOXL. In my mind, so cool. SOQL just sounds better, but that's not what it is. SOXL is a 3x leverage play on semiconductor stocks. So when this ETF of collective, group of stocks goes up 1%, the ETF goes up 3%. And it's crazy. It's so volatile, which means it's riskier, but for me, that meant juicier premium. I was an option seller. I was obsessed with that. There was one weekend where SOXL hit the lower second standard deviation Bollinger Band. So that standard second band. And I sold the put, like, at the money, basically. So, sold the put, like, basically where price was because it was at the bottom of that band. I was like, oh, heck yes. Like, I want to get assigned here. I got assigned. So, that takes, like, into Friday. It gets processed. So, the stocks, get into my account Monday morning. Monday morning, it's up. I think it was only up, like, 5, not even 6%. Maybe even 4%. But it was up, like, relative to the other updates that it had in the last 3 months. And so I cashed out and I sold them immediately that Monday. And that difference in price between the buy and the sell plus the put premium, it was like $500. So that was super fun. So I obviously love a leveraged play, but now that Nvidia has 3 expirations a week. Are you kidding me? Nvidia having 3 expirations a week has been the best thing ever. This is why I'm making this video, is because people don't understand. Like, this is so neat. Like, this hobby is so niche. Like, no one understands like why Nvidia having like 3 expirations a week just not only make my day, but like make my life, like make my year. Like, that literally makes my whole year. So I would much rather put like $17,000-$18,000 on Nvidia, because now my account, it's more than 20,000. When I first started playing the game, like, my put on Google was close to 20,000. That was too much for me. I didn't believe in it. Like, that was too emotional for me. But now I'm like, okay, Nvidia 17,000, like I can throw that much collateral on the line, like it's not gonna bother me. Also because like I'm just obsessed with the stock. The fundamentals are good. Most of the analysts say it's a buy rating. The management's good. They actually were at the top of the Great Place to Work list, I believe, was it 2 years ago? And that's really hard to make that list. So, having good management is kind of a bonus indicator. And you definitely want to. I'm not gonna say this is not financial advice, but I definitely would not put my money or be gambling on places like Paycom. I live in Oklahoma City, so I hear the mumbles, the grumbles. I hear through the grapevine what's happening at companies like Paycom. And if you have bad management like that, like I will never like place a penny. Like I'm not interested. I'm not interested in that. And not to say that, anything and everything that every company does is perfectly ethical. So obviously like you can't agree with everything. No company's going to be perfect. But at the end of the day, I'm okay with Nvidia. And that's actually my number 6. I had so much fun trading on Nvidia. I loved trading on NVDL last year. But I love trading Nvidia. It fits my overall vision for my account. And like I said, especially now that there's 3 expirations in a week, that's 3 opportunities to sell puts. And sometimes I have, I sell puts on red days. I especially love to sell puts whenever the price is heading towards that second lower standard deviation band. And I've had weeks where I've made a couple $100 in premium. And my goal this year is to make 10,000 in the year. I'm not really close to hitting that right now because I'm only up like 1,700 in the first quarter. I really need to be assigned some puts. I haven't been assigned any puts on Nvidia yet, but I'm hoping I will, and I'm hoping that I can churn those out and sell some cover calls and make some really decent profit. Hopefully like at least 1,000 profit after one of the wheel cycles is complete. So excited for that. Yeah, it's just easier to find trade setups. I have been trading those really short expirations, so I have a lot of fun. Like it'll be like Friday afternoon, I might like buy back a put and then sell a new one for Monday, make $100. I just did that this week. It's Monday today. Is it Monday? Maybe it's Tuesday. I don't know. Yeah, I think it's Monday, and I made like $100 on a put on Nvidia that I bought back today for a $99 profit. So the last one is that number 7. I'm laughing because as serious as I take this, it is just a hobby. So selling options, it takes a ton of cash. Like I said, $20,000 to start. That's not like for a normal amount of money for a normal person in America at this time. I understand how privileged I am to have that money on the table just to go, yeah, here, throw it to options, see what can happen, be a casino, let people gamble and buy puts and buy calls against me, and let's have some fun. Like that's a serious place of privilege to be in, and I'm not frivolous about that at all. And also, again, with this not being financial advice, I think it would be fine to advise that the average person go see a financial advisor, and they probably wouldn't tell you to get started on options because it's kind of crazy. It is a whole lot simpler. Again, not advice, but in my opinion, it's a whole lot simpler and easier just to dollar cost average, and that's why you hear people talking about it so much. Just buying SPY, buying VOO, and or a mutual fund and a retirement fund. That is majority of my strategy. So my 401k is majority of my net worth at this time. That is in a mutual fund through my retirement account and through my employer, I should say. And that's in like Vanguard Retirement Fund 2060. You can't do options on that. That's just a mutual fund. So, S&P overall market supposed to increase average 8 to 10% a year, and really the percentage that I made last year compared to my collateral isn't so different. And so low and slow retirement accounts really should be the focus of anybody wanting to learn about investing in general. This is just truly like for fun. I'm obsessed. I'm a nerd, and my mindset on money has just completely changed. Like, I'm having a hard time even thinking about like just investing in the S&P like a normal person anymore. Like, I'm thinking about having a huge options account and running the wheel strategy. So essentially selling puts and getting assigned on S&P 500, so SPY, at the lower Bollinger Band, and then selling cover calls and selling them at a higher Bollinger Band for like the end of time. And it's not a normal strategy. It's not. It's weird and it's crazy to be doing this, but I'm just obsessed with the fact that there's a way to make money outside of my normal job. And it's something that I'm insanely passionate about. And I think that most people should have a side hustle. For me, I'm introverted and I'm very analytical. So the idea that I can sit, on my phone. I do all my trading on my phone. I don't really use a computer unless I'm, running financials on a new company or a new stock. I'm essentially on my phone. I'm looking at Bollinger Bands. I'm looking at the 3-month time frame, and I'm deciding if I want to enter a position, and then I'm executing and I'm making premium, and then hopefully getting assigned and then selling at a higher price. I mean, it's just like it's a hobby, but it's also one that profited me close to $5,000 at this point. And so to me, that's enough to keep selling and keep making it such a big part of my life. And I'm just so excited and so passionate about it. So thank you for joining me in the top 7 things I learned. I am working on a stock class that hopefully gets published if I get the motivation and knock myself out of the perfectionism that I have with it, because I'm being very critical on myself. It's just hard. It's hard to teach options. It's hard to learn options. It's so insanely complicated. And if you're new to it, I'll tell you that I took essentially an entire month, December 2024, just straight up, not even reading, but just like watching YouTube videos and taking frantic notes. Like, iPad out, notes app on one side, YouTube video on the other, and just frantically typing, taking notes, trying to understand what the heck people were doing. What the heck is an options chain? There's so much to learn, and it can be overwhelming. And as someone who's trying to maybe teach it, it's very overwhelming to think about people learning from me. So that's why I decided to make this video a little bit more short and sweet, just going over the main things that I learned in the last year, and then hopefully we can go from there. I think there's a lot to absorb from hearing people's stories. And if you like this and you want to see more content from me, please subscribe. Definitely there should be more from me. Like I said, I'm so seriously passionate about this. It's uncomfortable for me. I need more friends that can not gamble with me and play casino with me. But like I said, it takes a big amount of capital, and it's not for everyone. This is not financial advice. This is simply you being nosy and hearing how I spend my extra money and spend my time. So thank you for spending this time with me. And if you are interested in learning options, I highly recommend Options with Ryan. However, take everything with a grain of salt and don't take advice from any of us. Just be entertained by our antics. So thank you for watching. Bye. Love you.